So gold is a hold, regardless, because soon it will be unholdable. And I imagine they're going to come with tokenization and registration on your gold in some future, with lots of draconian laws for those that refuse to register their family wealth in their system. So be prepared for that. It's not just buy gold. That's not a good enough strategy. You need to have thought this through all the way through who you're dealing with. And this is a relentless statist, write the laws, enforce the laws, technological fascism that is blood curdling.
Hello everyone and welcome to another edition of CEO and Market Expert Interviews. I'm your host Lucian. Most of you know me as Triangle Investor from social media. I'm joined today by Francis Hunt, aka Market Sniper, a guest that I always enjoy listening to. Francis, thank you very much for coming. Welcome back.
Delighted to be back with you. Thanks for asking.
Thank you. The topic we cannot avoid these days is Trump tariffs, which really led to a wider spectrum of trading war each day. The latest was the announcement of 25% steel and aluminum tariffs. China has also imposed export controls on 25 rare metals, sorry. How do you see that? And will we see an escalation that could really get us to a serious problem and trigger broad recession even?
Great question. And these are specific industries that I think Trump wants to protect in the US and re-nurture back up. So steel was something that got pretty hard gutted as we globalized. And what we are seeing is with the bifurcation, we're seeing bringing back manufacturing. I want to make a statement on manufacturing and having some manufacturing, because I think economic policy, especially if you look at the UK, but other places, the loss of a manufacturing sector should not be something that should be aspired to just because you've got services or technology. And what we're finding is making and the ability to do scaled production of anything doesn't go out of fashion, in truth. And the reliance on China by the Western Axis as a workshop of the world is one of China's core powers, actually. And the hollowing out of manufacturing on this global workshop basis that sees a country like the UK be very, very low on manufacturing, very overweighted in financial services in London, has actually led to the likes of the UK particularly looking very, very vulnerable right now. America has also hollowed out its manufacturing base to its own detriment. And so to bring this all back to your question, some of the production of raw materials such as steel and the cost benefits that other nations that have lower living standards brought about, it's an attempt to shore up and bring back a little bit of the raw materials production onshore in the US by leveling the playfield in their mindset. Whether you think that's leveling is another aspect, because there was quite a strong labor union Teamsters vibe about the silver guys. You think of the football team, the Pittsburgh Steelers, and how that industry got hollowed out and became blue collar America to almost to a very low struggling class. Bringing a bit of economic activity to that area is going to be very much to the Trump base of right-leaning working class heroes. So I think there's a little bit of that. But there's also the fact that the whole globalization of everything, where everybody trusted the workshop to go completely offshore, which is outside their legal jurisdiction, their military jurisdiction, you're seeing this part of the deglobalization bifurcation. So that's what that represents to me. And it's going to be protectionist, and it's going to play to certain interest groups. The one point I'll make, that China retaliated on Trump, because I think for now the Mexican and the Canadian one has kind of been in a rollback or pending position. I'm not the most up to date on that. Pending, better border security, the immigration, the fentanyl, and all these other political hot dog topics. But in China's retaliation, They very specifically targeted US energy, which was
Yeah.
natural gas, liquefied natural gas, particularly because the US is full of that. Houston has now got one of the big ports. They are exporting to Europe that after Russia became a non-supplier, despite there still being a pipeline. There's only one was blown up. There's still another pipeline. So Germany's been held captive to essentially US gas, and they're wanting to gain market share, possibly in other jurisdictions. And China's levy on the US energies is going to mean that they are restricting US markets for that, and they're not going to allow for dumping because gas in the US is very cheap. It actually was burnt off and as a waste material for so long, whilst you had a much higher level
Yeah.
of need and aspect of use in Europe and payment price. So Europe is the chicken or the duck that's getting plucked here for the gas pickings, and China's ensuring that that isn't coming. And that which might go will obviously have to be cost effective enough to cope with the tariff, which points to inflation in China's manufacturing as well. Because if the US has a cost advantage in delivering light natural gas, China is actively killing that and ensuring that there will be a higher cost of inputs. And as the reason I'm focusing on that is they make most of the stuff, and it's all on energy. Massive factories aren't created overnight. Massive production lines aren't created overnight. But the energy that goes into there is absolutely a factor. And they're not going to accept low-cost energy at the benefit of the Americans. And if they are, they're going to make sure they're getting paid to do so by that tariff, which is between 20 and 25%, depending on whether you're talking oil, gas. I haven't got the vagaries immediately to hand. But that isn't an inflationary factor on input costs.
Mm-hmm.
For the manufacturer, China's factories, which is going to knock through into the output cost that goes to a Walmart, which if coming from China is again going to have another 10% on it. So you can see each person is saying, we'll have an extra stake and take on the pie, and it's government take. So it's China getting a cash flow, and then on top of the end delivery into America from China, it's America taking a cash flow. And who's going to be paying for that? You guessed it, the American consumer pays for the Chinese tariff and the Trump tariff. So you're going to actually transfer money to two governments, approximately to the same degree, who are going to have a free cash flow to generate their surveillance finance, digitization, dark state, all their traditional agendas, all at the expense of the US consumer largely, which is going to be inflationary, which is again core to our central thesis. The long run is inflation comes back and you have an interest rate blow off on a debt-based crisis. Based on the fact that you're giving a crushed consumer in the US who's more wrecked, in our opinion, than we think, and is also in a situation that's going to be paying higher prices as these things start filtering through. Bear in mind, these things haven't hit yet. These things stack up in the pipe, and then they come through, and then they keep coming through. So you're looking at a return of inflation, which is obviously going to drive metals in the long run, even though we're calling for a short period of localized high at the moment. So let me leave you with that to unpack, because I've said quite a bit.
Very well said, and I tend to agree with the majority of things you said over here. But Francis, how do you think financial markets will react to that scenario?
I think one of the few views that I would concur with out of my trading view news feed actually was saying volatility on FX and potential dollar dominance. And actually, it's one of the few times that I've actually agreed with articles coming out of that. So this is going to be dollar strong because of it's likely to be inflationary. Everyone who's macroeconomic aware, remember, we're going to have very bright people in investment banks, trading desks, etc., etc., etc. And don't forget, you just had the gold price moving in a disorderly upward manner. That's an inflation hedge indicator, typically, gold appreciation. You've also had, let's just check the US 10-year. In fact, it might be a good time at some point to show you some charts just to tie that in. The gold price, let's just show everybody it's a key level. If that's good with you, I will just pivot over to that. You're seeing gold going up, which is kind of very in the inflationary camp. Let's get the gold chart up. This has just finished a technical target for us. So we're calling a little bit of a localized high. You're having what I would consider to be quite a disorderly move to the upside. It's very similar to that leg
Yeah.
over there, which is all part of this macro move that we've been calling, that is this continuation structure. So in our view, it's very timeless that we're talking right now,
Yeah. Yeah. Agreed.
because our view is that you're going to have a localized high. It could be something like this, and you go down and sideways for a while before going up again. It could be something like this. We don't know what it will take, but you could go sideways a bit. The big trade that has just closed for us is a 38 times risk reward that we called 1 year ago, which is jumping in on the squeeze here, the fourth break. The fourth time was the break of the 2K to stay above. You got knocked back once, twice, three times. The third time not near as far.
Yeah.
And then you went and sat and supported on the blue line, which was your 2K. And we said, this is your 38.2. You could have got in there where we've entered the entry, and you could have had a super tight stop. And then you've held this for a year as a trade, and you've gone from not much over 2K, around 2011 dollars as a stop loss, and you will have run this to 2,900, and possibly, you could almost argue a perfect $900, because I think we're at 2,905 at the moment. And that's our take profit level for leverage trades. Macro, we remain along, but there are periods, as you could see at the last localized high. This was quite a lengthy period. We don't anticipate similar length, but before you actually broke properly away, you actually had a 3-year continuation pattern setup with regular rejections, and most of the time you trade below that localized high. So it's something to bear in mind for us. This is a staircase up. It's also getting close to the key levels of the 1,000 marks, and we've highlighted 1927 was 2011's high. Again, stopping a good bit short of the 2000K. So that you'll see on the monthly. If I switch to the monthly, every time when we are considering a new high, that was 1927. And we went away for 2011, and it wasn't until 2020 that we actually broke. 9 years. Now, I'm saying these patterns are actually, these durations are shortening ever more between the 1,000 falling, which was even earlier than all of this, the 2,000 falling. So each time these periods are getting shorter, because we are getting deeper into these inflationary periods. That was 1979 to 800. Then we had this period to this period. And then you've had that 3 years to that 3 years. So each time it's getting shorter, and then you're moving again. So I'm not saying it's going to be a lengthy bear market, but I do feel this 2.9 just prior to running the 3K could turn out to be a spell of sideways, a little bit down, and progress decay on the narrative, which could mean rotation into platinum. We like how platinum looks, so I'll show you that.
Yeah, please.
It's a bit of a niche. It's not traditional bullion, but we really like how platinum looks, and also a degree of dollar strength that could permeate. And we're seeing that probably as a result of inflation, which is part and parcel of the narrative of higher rates, which is tariffs. So the Trump tariffs is actually dollar strength, because it's inflation. He's introducing inflation back into the game. This is our setup for platinum. Again, you could have bought this sub 1,000. It's currently just above 1,000 by $4, but you may get an opportunity to pick it up sub 1,000 again. But this target is 1,671 that we're looking at, and because of its structure, it's a first setup in a new trend. We actually see overperformance. So we wouldn't close the whole position on a leverage trade there. We'd do a partial close and go into overperformance management, for which we have a methodology. And just so that everybody knows, this is platinum's performance so far. Massive falling wedge that spanned decades. The last time you had a really strong platinum price was back in 2007, before subprime. We're getting to that point where this is 15, 16 years ago now. And yeah, it's some time ago. And this is the first setup, having broken out of this falling wedge for a reversion to bull. And just to finish making the case for why I think platinum will do rather well, this is platinum divided by gold. And you will see it will eventually start getting the monetary respect that I feel it's due. Let's get gold on Uganda. Apologies for that.
Sure.
I want real history here. Okay, that'll have to do. You can see the relative valuation since 2005 of platinum here.
Yeah.
It has been absolutely crushed. You're talking about something that used to sell for 2.6, 2.7 times more than gold, that in actual fact nowadays is selling for a third, 0.35, around a third. And scarcity, which is why debt is overvalued, it's anything but scarce, is you've got about 8 times as many ounces of silver found for gold.
Yeah.
And then you have, for every 20 ounces of gold that you find, 1 ounce of platinum.
Yeah, that's unbelievable.
So you have about 160 ounces of silver to find before you're getting your 1 ounce of platinum. Now, it's almost, many people say, too small to be a monetary metal. Well, you just push the price and the value up, but it's also utilized and it's very, very unique. So it could be starting to reach a point where the relative valuations, having seen gold run, you start to get a little bit of monetized element. But if you're just relying on industrial elements, it's one of the reasons why it's fallen so far. So industry is crushed. That's also why silver is lagging. And despite copper getting a nice little run, it's also why we prefer gold still primarily against most precious metals. But eventually, I think we're getting to this point where platinum will need to turn because of its link to the monetary side and its scarcity. But the more industrially used silver and copper, we still think keep accumulating the gold. The gold will be the outperformer, but it looks like a localized high. So you could close out, you could stop adding gold ounces in your dollar cost average, you could add a bit of platinum, but you could also look at some of those dollar long trades, and we're aggressively long dollar against the Korean won, which we think is the largest mover of major first world nations collapse. So there's something coming on South Korea. We still don't know. Maybe it'll be a North Korea event, maybe it'll be China, maybe it'll be, I don't know, maybe it could be a pandemic, there we say. Who knows? We can sit and guess. We take the trades typically and we get the answers later, which is why we tend to be the news before the news when we're accurate. But I'll leave that for you to unpack as well, because there's quite a lot in there.
Yeah, great technical overview. You can stop sharing the screen. I would like to return to gold, to fundamental thesis, so to say. Really, gold is looking strong, like you said, technically, fundamentally. But what is fueling this kind of strong upside? Is it the central banks, the investors, or the mix between those two, or something else? What's your take?
I get concerned when too much news escaping and leaked, because I am very aware. I don't tend to trade news. I trade technically because it's always served me better. And the narrative right now is almost as if they're doing a major reveal on hypothecation, which is the ultimate end of the gold manipulation and true price discovery that could see wholesale mega moves. So I see the emotional response that could provoke in me is wailing in long, and then I'm seeing a technical target just made. So I'm inherently cynical of media flow and anything that is being put in front. So the fundamental news flow is never been more bullish, because essentially you've got, I think, close on 393 tons that has flowed out of the UK to help shore up potential shortfalls in the US on claims for delivery. You've got very high borrowing rates. You've got everything ringing alarm bells after we've already had a near $900 move in probably just under a year. So I feel technically the bull flag top and the upside that we had a smaller time frame HVF, I'm taking leverage profits right now into this wave of retail optimism that is coming out of this news flow. We all know what the end headline should be if there's been manipulation and fraud, and it's rarely now is the moment. I don't think this is the great reveal where the curtain is pulled back and we see the fraud. It's dangerous to think, here's the one, I'm going all in. Because that event can only happen once, but you can cry wolf 20 times before that event occurs. So I'm calling a cry wolf on the leak media that is creating a degree of hype, mania, and FOMO. And I watch FinTwit for this, and I'm comfortable to go out there and say to everybody, I'm closing leverage longs into this wave of euphoria about, empty vaults and all of this. I think this is another cry wolf, because I think cry wolf is the safest bet, because we usually get cry wolves. Only once will it count, and I don't think now's the time.
Okay, so if I read between the lines correctly, you would say that gold is at the moment short term overbought and overvalued.
I'll never say overvalued. I don't think we have a true price discovery mechanism, but technically, I take the target on leverage trades. At an investment level, I remain a holder, just because you may not ever be able to acquire again if you were to sell your investment hold. So to be clear on my position, investment is a macro long for that eventual day when the wolf does come. I take leverage trading profits at the cry wolf moments where there seems to be a high level of FOMO-based news, and more importantly, the key driver, the technical targets have been met. So I'm a technical macro trader, and that drives my decision making. And we've just had a 38 risk reward, as I demonstrated, land. So that tells me short term, medium term, I'm bearish to broadly neutral gold after the move it's already had. Macro time frame, a net investor for the long side to much higher valuations later.
Got it. Francis, in our prior interview, you stated that we are close to a demand-destroying event. Do you believe that tariffs and trading war could be that event, or do you believe it will be another event or even series of events?
I'd probably say there's a shock and awe, like Rumsfeld, the economic equivalent of Rumsfeld's military shock and awe, that's going to occur, that will all be contributing to it. But tariffs are part and parcel of that for the reasons I've already given. They're going to drive inflation up. And the way you get a demand destroying event is invariably, I think, a disorderly dollar appreciation that, rather than implying economic health, which is the usual reasons currencies go up, it is what I'd call the schizophrenic sugar spike of a system-based design, where the only nation whose currency goes up is the one that has lots of offshore debt based in its currency, as per the economic hitman narrative, which sees a lot of other nations needing to print, as rates go up, more of their currency to be able to acquire dollars to make payments on dollar-denominated debt. So what that actually causes as rates go up, you need an ever greater supply of dollars, because people borrowed 100 billion, but actually over the duration they have to pay back 125 or 140 billion, depending on the compounded number and the duration, etc., or the nature of the deal. And as that rate goes higher, those interest payments get ever higher. So there's going to be an unhealthy rush for dollars in emerging markets and other nations that have borrowed in dollar debt. So that leads to an interest rate spike potential because of the inflation and because of the rush on dollars. That leads to dollar-based strength. So the debt-based collapse, which is the foundation of our pyramid, if you want to call it, the debt-based collapse sees a disproportionate interest rate swing as the debt gets devalued. And America is deep, deep in debt. There are other nations that are deep, deep in debt, but they're not the host nation's world currency. And the net result is actually a spike in the dollar on a base of high interest rates and a collapse in American debt. And I don't see the doggy being able to reverse a litany of presidents from the Fed Volcker. So every Fed chairman since Volcker, many of them having multiple presidency terms, has committed sins in an economic sense, particularly Greenspan, who's not singled out for this, who's very much after me the storm. But every other one has also been like that and had to deal with various crises. So we're going to have to unwind the better part of, since the 87, I think Greenspan came in, all the way through to today, of greater proliferation, greater debt, and the Treasury Department's ever greater expenditure. America is going to be forced to live in its means. It will no longer be able to sustain the military. One of the big things people say is we've got the biggest military, and that's a maintenance bill. It's an ammunition bill. Ammunition actually expires. And it is, of course, an interest rate bill. And eventually, when you can't do that, you're going to see that desert that has all the old B-52 planes and all of that, having far more modern kit sitting there, getting cobwebs, being stripped for its copper and its silver content, as they no longer can maintain on account of debt. And you won't be able to spend more than twice what you get in, because you won't be able to afford the interest rate payments that you're paying to your banker cartel for having the exclusive privilege of borrowing your money into existence. Only the banking cartel's doing well as those interest rates go higher. So it's a mega big mess that sees the last thing fall, the military dominance of America. That'll be the last domino to fall, but it will become unaffordable. You've created a hungry machine that just consumes. It's like owning 5 Hummers instead of one Mini to get around. Eventually the insurance bill, the parking bill, the maintenance bill, and the petrol bill, or the gallons, are just too big for your household to afford. And then they go out back and they rust and rot. And that's kind of where we're at. So those are the last things to fall, and that will be the dollar's part of the last things to fall. Everything else is already in a state of collapse as far as I'm concerned.
Yeah, agreed on that. And like you said, we are in a big mess, and we are in a debt-based system. Would you agree that it is fraudulent system as well? And if yes, at what extent?
More than everybody realizes. There's a massive amount of the fraud money spent on covering up the fraud. And eventually the curtain gets pulled back. You have a series of events where you find out certain things, and it always goes deeper, darker, and longer than you expect. The Epstein disclosures, for example, the Iran-Contra affair, the degree to which money is being paid. You've got the US aid affair right now in terms of finding out essentially what is a dark state money quango that is funding news flows that are favorable to specific agendas. You're seeing all of this being exposed inside isolated areas. When you see the full curtain pull back, instead of these partial thrown a bone disclosures, it's going to be far larger than people think. My potential estimation is that America's been trading bankrupt as a corporation for far longer than people realize. And the net effect of that is the vault is empty. And I'm talking about gold. I'm talking about a lot of things. By the time they admit everything, every trick in the book will have been pulled. And that's why this gold flowing from the UK, the special relationship guys, does sound like very much a band-aid to a popping wound. But I refuse to allow my trading to be dictated by news flow. The technicals say take off, you've done real well, and that's what I do. And we did it today.
Yeah. Let's conclude this interview with crypto. Do you see crypto prices rally again soon on Donald Trump's promise to make America as a digital asset superpower?
Crypto in the macro term will go higher because it's part and parcel of where they want to take us. Many people think, okay, Trump's here and he's our savior. Elongated muskiness, as I call him, and Trump are here they are accelerators for the digital surveillance grid world we are going to be pushed into. So everybody is in the left-right camp, and everyone's praising and so relieved that they've got him. It's, as I say, there's a green or there's a red pole and a blue pole, and you're continually as a ping pong ball being bounced ever further into Bolshevik technological communism, which is essentially a modern version of what happened in the USSR, which was brutal, and very aggressive. Now they have the technology as well to do this digitized system. You saw the UK force Apple to disclose everybody's privacy. The biggest loss of any feature is privacy over the last 2-3 decades. That's what Snowden told us, Assange told us, everybody told us. So we are seeing the loss of all privacy for the purpose of extraction and reductionist to the lowest common denominator. The system's not going to be happy until we are all eat with our hands serfs a la the USSR. People who are middle class and educated and use cutlery should be terminated. So it's quite a dark view I have in terms of where they're taking us. So this digitized agenda is here absolutely to stay. They made the Democrats so repugnant they didn't need to crook an election. Everybody pivots from the one post to the other. So they attract and they repel, and the blue turned repel and the red turned attract, with all this talk of rolling back the cultural Marxism side of the agenda, which was the LGBTQ, whatever, immigration. And now you're going to get digital ID and biometrics to fight the unheralded immigration, because this is the tool and the technology we need to do it. So the one hand is washing the other. You are marching in a left, right, ever upwards into this technological Bolshevik system, which is essentially it's a gulag of digital making as opposed to the physical one. And 15-minute cities and UBI and all these things will become a thing, and you will be hated and resented for being self-reliant, and they will do all they can to strip landowners and various other things. So gold is a hold, regardless, because soon it will be unholdable. And I imagine they're going to come with tokenization and registration on your gold in some future, with lots of draconian laws for those that refuse to register their family wealth in their system. So be prepared for that. It's not just buy gold. That's not a good enough strategy. You need to have thought this through all the way through who you're dealing with. And this is a relentless statist, write the laws, enforce the laws, technological fascism that is blood curdling. So we've got a lot of work to do beyond stack gold. We've got to be prepared and organized to fight all the way against a very, very aggressive captured system. And if I can sign off on this, that is what my community is about. That's what we discuss in the Market Sniper YouTube channel all the time. And making measures of protecting you socially, societally, locally, where you become self-reliant, raw milk, good, clean, unvaccinated meat provided by real people that see what's coming and are staying out of it, is part and parcel of the solution beyond just gold stacking. And that's our focus, and that's our community. So thank you for having me on, and I hope I answered your question clearly.
Francis, you did. It was a great chat. That was Francis Hunt, aka Market Sniper. Great chat as always. Thank you, and I look forward to host you again.
Thanks for having me.